Hello, I'm John Treadgold, and joining me today from GPT Group is CEO and Managing Director Michael Cameron. Michael, welcome to FNN.
John, great to be here.
GPT Group is one of Australia's largest diversified listed property groups. You've just released your interim results for the first 6 months of this year. What were some of the highlights?
Well, firstly, we were really pleased to deliver an EPS growth number of 4.5%, which seemed to exceed market expectations. And that was driven by a few things, but probably the standout was the growth in our funds management business, which grew 18% over the 6 months.
The group's net profit for the first 6 months of 2014 was $240.6 million. It was slightly down on last year's result. What was behind the change?
It's interesting, we were required to include in our net profit any mark-to-market improvements in derivatives and foreign currency movements. There was about a $36 million change between last year and this year, and that's the real driver to the reported number. As far as the rest of the business, it performed very strongly, and we saw an increase in EPS period on period.
Earnings per share growth of 4.5% shows strong returns for investors. Was this in line with group strategy and forward guidance?
Yes, we've been talking about a number for the full year of around 3%, and today we've said that we will deliver a number of at least 3% for the full year. So the 4.5% is a relatively strong number against the expectations.
The group has two fund management platforms, the Wholesale Office Fund and the Wholesale Shopping Centre Fund. What sort of returns have they offered this year?
Yes, we've been getting between 9.5% and 10% total return for GPT. That's a combination of distributions and also the fees that we get from that business. But we've seen great growth across the business. We've grown by about $1.1 billion from the start of the year, and that's been well above what's happened in the rest of the market. That's 18%, and I think the rest of the market's grown around 6%.
GPT prides itself on the strength of its balance sheet. What's the debt position?
Our gearing at the moment is just under 25%, and that's at the bottom end of our range. So it gives us significant capacity both on our balance sheet and within our funds to look at opportunities, either to acquire more of our own shares or any acquisitions that might come up from time to time.
The company is spread across retail, office and business parks. Which performed best for the group in the first half of the year?
Well, one of the benefits about being diversified is those three sectors have very different characteristics. The retail performed probably the strongest, but we also saw good performances in the office and logistics portfolio.
The market is sending mixed messages about the strength of the retail sector. How is your retail portfolio performing?
The retail portfolio has been quite strong. 11 of the last 12 months have seen positive improvements in sales. And out of 3,300 shops, we've only got 35 vacancies. So all of the leading metrics around sales, traffic have all shown positive signs of improvement, which is really pleasing. That's off the back of a few things. Firstly, stable interest rates, job security and improving house prices.
Office leasing is a role that GPT is well recognised for. Have there been improvements in that sector for the group?
The office leasing market continues to be pretty tough, although what we've seen in the last 6 months is over 100,000 square metres of leasing done, and that's sensational. And we've dramatically reduced our exposure to expiries when I look back 5 years compared to the next 5 years. So we're in a good position.
Many of our viewers may have noticed the activity at the MLC Centre in Martin Place in Sydney. What can we expect there?
Yes, what you see at the moment is a refurb of the exterior of the building. That's costing about $63 million and will take a couple of years. What you don't see yet, which is emerging, is a complete repositioning of the retail downstairs, the food court and the office upstairs. So it's going to be a fantastic building and we'll crystallise enormous value from that asset as we go forward.
And what is the outlook for the group's performance over the full year?
Yes, we're confident of delivering EPS growth of at least 3%, and we're right on track to deliver our total return of 9% for the full year.
Michael Cameron, thank you for giving us a closer insight into GPT Group's first half result. We hope to see you again soon.
Thanks, John. A pleasure.